What's going on, guys? 360 Digital Closing Bell here. I am Michael Tanner. We are live on YouTube from an undisclosed location here in Denver, Colorado. As always, I am joined by the executive producer of the show and the director and publisher of the world's greatest website, Stuart Turley. And for the first time, we have a guest appearance from the director of Entercom, Dan Genovese. How you guys doing today on the show?
Doing fantastic. Dan, it's good to have you as a guest today.
Yes, it is.
Thanks for having me, guys. Great to be on. I think this is my first run at the Digital Closing Bell, so I'm going to enjoy it.
We'll give you your hazing after the show. We're going to specifically talk with Dan at the end. You know, as the Chesapeake expert within Entercom, I felt it was necessary to bring him on and get his opinion on what happened. We had a really interesting conversation around that. We'll get to the digital ticker and everything that happened in the market today. But first, guys, please just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube. I keep telling you every week, but it's the best way to stay up to date on all of your energy market information. When we look at the markets today, I mean, markets were up today solely on the fact that today being Tuesday, June 30th, end of quarter two. If you want to say quarter two was positive, you can say that as if you hop on CNBC, that's what they'll tell you in their market recap, that the markets finished their best quarter ever since 1998. But considering we were off complete coronavirus lows, I'm not sure if that stands firm. So it was a mixed day in the markets today, but ending quarter two, you saw about a 1.5% gain on the S&P 3,100 flat. That's a 46-point gain. Like I said, 1.5 percentage points for that index. NASDAQ tech stocks trading about 10,124. That's 162-point increase, about 1.6 from that increase, both led by Facebook and Amazon trading much higher on open. Dow Jones not doing quite as well, 0.8 percentage points on that index, only 216 points, up to 25,812 for that index. Crude oil, only red number on the board today, down 18 cents to 39.45. So red if you want, I call that flat, only a half a percentage point down. But good to see that number holding strong as we move in starting off this week. Back into the curve for crude oil, 40.50 for 12-month strip, about a 37-cent drop, so it's a little worse on the back end of the curve. Natural gas, though, back from the grave. We saw $1.45 to end last week. Now we're back up $1.75. It's a 5-cent increase. That's 3.5 percentage points on that index. But 12-month strip stays fairly flat, only about a 0.6% increase, $2.73, only up about a penny on that index. XOP, which is our E&P securities contract, 52.18. Good to see that number climb above 50, as we mentioned. $1.40 increase, 2.7% percentage points on that index. OIH, which are oil field services, $121.88. That's a $2.80 rise, up to 2.4%. On the downside, though, Contango Oil and Gas, we love them. Ticker symbol MCF, down $2.29. Negative. That's a 13% drop. Lone Star Resources Corporation, I wonder where they're located, down 47 cents to 14.7. That's 14 percentage points off. And Denbury Resources down to 28 cents, or 17 percentage points on that index. As we mentioned, XOP was up $2. 2.7 percentage points. So we see some nice numbers on the upside here. EQT up 7.5 percentage points to 1190. Continental Resources up to 1753. Good day for Continental, up 8.2 percentage points. And Dorchester Minerals, a limited partnership, up 9.8 percentage points to $12.79. Guys, please check out theoilandgasconference.com. It is the premier investor relations conference that for the first time ever is going digital, and you can attend it anywhere. It's going to be over 40% in companies. You're going to be able to attend breakout rooms, also be able to attend one-on-ones that are MIFA certified if you really want to do that on that end. And it's all going to be able both digitally and in some select cities. You can check out all the information for that on theoilandgasconference.com. Stu, what's on the international news desk today?
Hey, Michael, a couple things. We've got ADNOC, and they're going to be shutting down their Bab oil field for maintenance. It is going to bring off 370,000 barrels per day offline, which is something we need real bad. OPEC hit their lowest output in 2 decades as Saudi Arabia and other Gulf members made larger cuts. But Iran is still, they're pumping out what they can. So
it's funny you don't see that reflected in the price of oil today. I would have maybe liked to see, that's a pretty, I would say, a bullish symbol for oil, and then we're seeing it pretty flat today. So it'll be interesting to go back and look at when that news dropped. Something else that I guess I had for the internet, that's both an international news desk story, Stu, and a U.S. shale story. Shell cutting their assets by $22 billion. As you know, Stu's been following the international news desk, all of Shell's international liquefied natural gas operations over in Australia. Well, that was one of the 2 major sections that got cut. So Stu, our favorite LNG in Australia, unfortunately gets shut down, but not shut down, I guess, reorganized and written off on taxes. The other thing that this $22 billion was because of specifically U.S. shale, and that makes total sense. Those are the two that were mentioned in the article. And what's funny is on the same day that Shell decides to cut $22 billion in assets, Wall Street Journal releases an article that was, I wouldn't necessarily say it's a hit piece, but this is an activist article, if I've ever said anything, for people who are very upset that Exxon hasn't done this same thing and cut down their assets. You know, as we know, in 2009, they acquired XTO for $31 billion. Last year, Rex Tillerson, former CEO of Exxon at the time, who came out and said, probably paid a little too much for them at the time. You know, as we mentioned, Shell, now BP, Hess, have all written down hundreds of billions of assets. I mean, the article, if you look it in here, I think it was, what am I saying? It's 300 billion that founding firms project that could be written down in the coming months, 300 billion. So Exxon's definitely a big part of it. So it'll be very interesting to see, especially as we end quarter 2, what happens with those. We'll probably be watching, and you probably see something drop somewhere, probably, you know, in the next coming weeks as earnings season rolls around, which is going to be busy for the podcast. But I want to bring in Dan here, because as we know, yesterday, the big, you know, the news that I don't think shocked anybody, but really shifted the way the energy industry looks, was sort of Chesapeake's Chapter 11 filing. We spent a little bit of time covering it, but Dan, being both the director of consulting in Entercom, who deals with a lot of the capital market stuff, also is a former Chesapeake employee, and I think he's a really interesting take and a unique perspective on it. So Dan, I just want to bring in and give us your thoughts on Chesapeake and what you see moving forward with this.
Yeah, I guess, you know, kind of the fundamental thing, and I think it's a little bit what the market might be responding to, is it's just sad to see an industry pioneer go down. Chesapeake did a tremendous amount for U.S. oil production. I guess my view is, you know, I get it from both sides. I think the default position right now may be to blame Aubrey McClendon, but in reality, he was just doing what the capital markets wanted him to do at the time, which was use leverage to acquire reserves and grow production. I think Aubrey was more than happy to make America energy independent from hostile oil states. That was his mantra, you know, America's natural gas champion, you know. So that drove him, and he saw the future in shale. And so, you know, we look now as America is now the largest oil producer in the world. And you can thank the vision of Aubrey McClendon that has made that possible. Now, granted, there was a gold rush type attitude toward it, but that was the mantra of capital at the time. So you know, I think that's the market sentiment. Is it's sad. Maybe it's easy to blame, you know, Aubrey, but we have this incredible industry that can produce a lot of oil and gas because of it.
What do you think of this current management team? I mean, if you read that press release, whoever wrote that press release deserves a raise, because that was really well structured to maybe have this management team move forward and stay. But I'm not sure. What are your thoughts on this current management team sticking around through this process?
Yeah, I can say Gordon's the one that probably wrote that.
Shout out to Gordon. He does a good job.
Yeah, but you know, a couple things. One, at this point, it makes you wonder whether this management team, you know, back, you know, in 2014, 15, 16, you know, the writing was on the wall. As you say, Michael, they were a dead man walking for a long, long time. Sometimes I wonder if it would have been smarter and better off if they would have restructured back then. I suspect maybe at this particular point in time, they ran the engine pretty long and pretty hard without any kind of oil in it. So, you know, maybe there's more damage now than if they would have just, you know, after Aubrey stepped down and Doug took over, maybe they could have done a better job of restructuring and preserving some capital at that time. But, you know, who knows? Nobody can look. Hindsight's always 20/20. But it does
always Monday morning quarterback.
Exactly. You know, I would say it looks like this management team is going to stay. And you know, they lavishly paid themselves to stay at least for a while, but I'm not necessarily sure I understand. I just think that they're going to have trouble gaining trust coming out of this management team. I'm not sure how much trust they're going to garner with investors moving forward. So, you know, it's probably time to get a new management team, you know, to exit the company with. But I think that that's all, something to be seen.
Yeah, the Digital Closing Bell, Stu. We are open if they would like to help us oversee the new management team hiring. We are more than available. If anybody else, Franklin Resources Fidelity, if you're listening, the closing, but we can handle your executive search. No problem. We're pretty cost effective too. So we're ready for that. Stu, have we missed anything on today's show? I think we've, Dan, I really appreciate you coming on and giving your thoughts specifically on Chesapeake. I know the inside information is always key. But Stu, we missing anything today?
I think that we also need to shout out to Dan for his capital accelerator.
Yes, yes.
Dan, if you give us half of a sec on your capital accelerator, I know people are lining up for it.
Yeah, I think going forward, I think the oil and gas industry is going to richly reward technology that produces 20+% IRRs that allow oil and gas companies to get more resource out of a wellbore. So if that's your technology and you're looking for capital, you're looking to tell your story to the oil and gas industry, I'd love to have you hit me up and put you on our Capital Accelerator session presenters. That's Monday afternoon on the 17th.
Yeah, D Genovese at entercominc.com. You can find out how to contact him. We'll put it in the show notes. But that's awesome. I know there's been some great traction on that, and I think it's a really interesting and unique thing to add on to an already really cool digital format. I mean, you're going to be able to, in your pajamas, be able to see what the top CEOs were thinking about and how they navigated this coronavirus outbreak. I mean, really an unprecedented event. So you're not going to want to miss it. All the information you can find out at theoilandgasconference.com. But I think with that, we're going to go and let you guys finish up your day and get back to work. Thank you for checking out the 360 Digital Closing Bell. See you guys tomorrow for the Digital Ticker.